Hello again. Good evening to you. Welcome to Business. State oil refiner Tor yesterday resumed production after a 10-month break. The company is now producing 25,000 barrels of oil per day. This, however, has come with some mixed reactions by some industry players. According to the energy think tank, it's important government takes steps to revamp the refinery and do the needed retrofitting in order to produce for local market standards. Speaking earlier on the marketplace, researcher of the IES, Richmond Roxon, advocated a transformation of the Tor debt recovery levy into a fund to be administered independently to help revamp the company.
It's been there for a long time, in fact, over a decade, and we haven't had a comprehensive account of how much we've made over the period, how much has been paid and how much is left. In our opinion, we don't think that the Tor levy should be there. If it's going to be there to help the expansion work for refinery, definitely that's. If it's going to go into the payment of debt, as has been over the years, that there's no business for it. Already, government has said notice that is going to apply all debt in the energy sector. Already, we've had some 4.7 billion coming in. We are looking forward to the other half of 1.3, together with the balance of 4 billion that the government was expecting. Because in general, we're expecting around 10 billion. The challenge is that over the years, if government takes these funds, they don't channel it into what we expect them to do. So we would suggest that even if we are going to have the total recovery levy being there, we should have a trust to be able to manage the fund. Once it's going to the consolidated fund and it's being managed by the same Ministry of Finance and going to a government coffers, definitely the funds will be diverted. We know government always needs money for certain projects. So yes, we agree that if we look at rechanneling the funds into other areas like expansion and retrofitting, that's good news. But at the end of the day, we can't have the same people managing the fund. We should be able to find a way to have a trust to manage the fund so that the funds will go into exactly what we are expecting it to do. Because we've taken Tor recovery levy for over a decade, and up till now, Tor still owes, which is pretty amazing.
Now, the Association of Oil Marketing Companies, AOMC, is blaming the upsurge of illegal fuel trading for the poor sales of oil marketing companies in 2017. Coordinator of the association, Kwekwa Jimandua, says sales per month last year was 50% lower than the previous year.
Exactly how would you describe 2017?
It was pretty bad for us, and it was very bad for us. For instance, I could tell you often that averagely we expect each average outlet to have sold about 150,000 liters per month. We got about half of that, 77,700 liters per month. Can you imagine? We were having an incidence of illegal fuel, and we have safety issues as well that we have to contend with. And certain agencies were trying to trample on our basic rights by trying to close those stations which they're not supposed to close. And it's not been easy. And,
why would you say that your sales was halved?
Basically, the illegal fuel had a serious impact on us. Even though we would like to commend the economic management team and the security agencies and our regulator, MPA, particularly Hassan Tampori, Chief Executive of MPA. He did very well in trying to stem the tide of the illegal fuel. And I could say that even when people were doing illegal fuel, they had to move. Getting to the latter part of the year, they started to shift the illegal fuel now to bunkering. He still stood steadfast to it. We are hoping that security agencies, in conjunction with the economic management team and also MPA Chief Executive Hassan Tampori and his directors, could help us as we move towards this new year, continue to be with us so that we can stem the tide.
Enterprise Insurance boss Kelly Gajekpo says the company is raising $50 million this year to focus on taking up insurance covers in the oil and gas sector. He adds his company is overcapitalized and is therefore not worried about the National Insurance Commission's current desire to increase recapitalization figures. He was speaking in an interview with Joy Business.
We are not even flinching. We ourselves are quote-unquote overcapitalized as we speak. And as you're aware, we are raising even more capital very early next year. So I'm not sure what numbers the National Insurance Commission may have in mind, but we are raising over $50 million in a few months just for our own business ambitions. So no, we are not even concerned.
Will that involve your heavy involvement in, for instance, the oil sector?
Yes, we want to have the kind of balance sheet and ability to do more and to have a strong presence in oil and gas in Ghana.
Exactly what are your current state when it comes to insurance services being given to the oil sector? Exactly what have you done so far?
Currently in Ghana, it's all pooled under the pool, the oil and gas pool. But I'm sure that cannot be a permanent arrangement, especially if people are able to develop the right size balance sheet. We should be able to take some risk on the right appropriate risk on our balance sheet. So we are gearing up for that for the future.
Chief Brand Officer for International Transport Services Uber, Bozoma St. John, says African countries will have to embrace technology in their transport sectors to open up the continent for more businesses. She spoke exclusively to Udilia Ntiamwa in an interview.
I think Uber is extraordinarily important to Africa in particular because it is the future. You know, companies like Uber who are in a gig economy are coming to countries like Ghana or Nigeria or South Africa to continue to further the communities and the cities in which they operate. What needs to happen for us is that we need to embrace this new way of being. Tech is unlike anything we've ever seen in the past, whereas other businesses grow at rates of 20, 50 years at a time, tech is moving at lightning speed. And if we don't embrace these new technologies, we'll be left behind. So it's really important for us to embrace the new ways that Uber is helping. It's important for us to support the drivers who are trying to create new businesses for themselves, and also the riders who are participating in this economy to feel safe and secure in using this new technology, and that it will actually help us all in the end. So for me, it's like this is just a gateway. Everyone else will come if they see the success of this type of company here. So I want to encourage us to really support the businesses that we're running here. You know, it takes a lot of hard work, it takes dedication, it also takes allies, you know, people who are going to support you, who are going to encourage you, who are going to advise you in the right way, because those are the people who are going to be there for you when you don't believe in yourself. You know, but at the end of the day, it really takes your own self-startership, you know, in order to really break through, because you're the one who's doing it. You're the one who's in the office every day. You're the one who's going to see the opportunities. And so it's really at the end of the day about yourself. But make sure that there's a good sounding board of a good village around you who will help support.
That's all in business tonight. For more business news, log on to www.myjoyonline.com/business. My name is Emmanuel Apuachi Riafi. There's more news ahead. Don't go away.